Welcome to Brainy Net. Let's dive into today's topic. I'm sure you've heard the news. China is making a statement. It's reducing its holdings of U.S. Treasury bonds. In 2023 alone, China decreased its holdings by over $74 billion. This is a big deal. It signals a shift in the global balance of power. For decades, the U.S. dollar has reigned supreme. It's the world's reserve currency. Countries hold U.S. treasuries as a safe haven for their reserves. But China's move shows a waning appetite for dollar-denominated assets. Why is this happening? One reason is the escalating tension between the U.S. and China. Trade wars and political disputes have eroded trust. China is looking for ways to reduce its dependence on the U.S. dollar. This move has significant implications. It could weaken the dollar. It could also lead to higher interest rates in the U.S. This is a critical development that demands our attention. China is not alone. Other countries are also reducing their reliance on the US dollar. This is particularly true among the BRICS nations: Brazil, Russia, India, China, and South Africa. These emerging economies are flexing their muscles. They are creating their own financial institutions. They are promoting trade in their own currencies. They are challenging the dominance of the US dollar. This trend is driven by several factors. One is the growing economic clout of the BRICS nations. Another is the desire for a more multipolar world order. The old system dominated by the West is being challenged. The rise of the BRICS nations has profound implications for the global economy. It could lead to a more fragmented financial system. It could also create new opportunities for growth and development. Renowned investor Ray Dalio has issued a stark warning. He sees the current situation as eerily similar to past periods of global upheaval. He points to the decline of the British Empire and the rise of the United States. Dalio argues that empires rise and fall in cycles. As they become overextended, their power wanes. This creates space for new powers to emerge. We are witnessing this dynamic play out today. Dalio warns of a capital war between the US and China. This could involve currency devaluations, trade barriers, and other economic weapons. The consequences could be severe, leading to global instability and recession. Dalio's warning is a wake-up call. We must heed the lessons of history and avoid repeating the mistakes of the past. The stakes are too high to ignore. The US dollar index is a key indicator of the dollar's strength. It tracks the dollar's value against a basket of other major currencies. Recently, the index has experienced a notable decline. In April 2025 alone, the index fell over 4.3%. This is a significant drop. It suggests that investors are losing confidence in the US dollar. There are several reasons for this. One is the growing U.S. national debt. The U.S. government is borrowing heavily to finance its spending. This is putting downward pressure on the dollar. Another reason is the Federal Reserve's monetary policy. The Fed has been keeping interest rates low for an extended period. This makes the dollar less attractive to foreign investors. The declining dollar index is a red flag. It signals potential trouble ahead for the U.S. economy. Section 5, A House of Cards, Debt, and the Illusion of Stability. The United States economy is built on a foundation of debt. The government, businesses, and individuals are all heavily indebted. This mountain of debt is a source of vulnerability. For years, the United States has been able to sustain this debt burden. The dollar's status as the world's reserve currency has allowed the United States to borrow cheaply. But this situation is unsustainable. As other countries reduce their reliance on the dollar, the demand for United States debt will decline. This could lead to higher interest rates and a debt crisis. The consequences would be severe. A debt crisis could trigger a recession, inflation, and social unrest. It could also undermine the United States' standing in the world. We must address this issue before it's too late. Section 6, Capital Wars. History rhymes again. History is replete with examples of capital wars. These are economic conflicts in which countries use financial weapons against each other. One example is the beggar-thy-neighbor policies of the 1930s. During the Great Depression, countries tried to protect their own economies by devaluing their currencies and imposing trade barriers. This only worsened the global economic downturn. We must avoid repeating these mistakes. Today we see signs of a new capital war brewing between the US and China. Both sides are engaging in protectionist measures. They are also using their currencies as weapons. This is a dangerous game that could have disastrous consequences. We need to find a way to cooperate and resolve our differences peacefully. Section 7. The Risks Ahead, A World on Edge. The global economy is at a crossroads. We face a confluence of challenges. These include rising debt levels, geopolitical tensions, and climate change. These challenges are interconnected and mutually reinforcing. The actions of China and other countries in reducing their reliance on the US dollar are a symptom of these deeper problems. They reflect a loss of confidence in the existing global order. We are entering a period of heightened uncertainty and risk. The possibility of a major economic crisis cannot be ruled out. We must be prepared for a range of scenarios. Section 8. Charting a new course, cooperation or conflict. The current global situation is unsustainable. We cannot continue down the path of confrontation and conflict. This will only lead to further instability and suffering. We need to find a new way forward. This requires cooperation, dialogue, and a willingness to compromise. We must address the root causes of global instability. This includes reforming the global financial system, reducing inequality, and tackling climate change. These are complex challenges, but they are not insurmountable. Section 9. The future of finance, a multipolar world. The decline of the US dollar's dominance does not necessarily mean the end of the global financial system. It could usher in a new era of multipolarity. In a multipolar world, several major currencies would share reserve currency status. This could lead to a more balanced and resilient global economy. However, it also presents challenges. Managing a multipolar financial system will require greater coordination and cooperation among nations. We will need to develop new institutions and mechanisms for global governance. The future of finance is uncertain, but one thing is clear: the world is changing. We must adapt to these changes and work together to create a more stable and prosperous future for all.